Let's begin with our market minutes. We did see stocks get a little bit of a leg up in the last hour of trading, so they pared their losses, but we are still looking at declines here for the major indexes. The S&P little changed here. The Dow Industrial is losing 38 points. That is its second straight decline, the first two-day drop for the Dow since late June, that basically before its 10-day winning streak. And
let's move on and have a look at what's going on in terms of
individual movers.
Yes.
Disney and Netflix, of course, we gave you the results yesterday from Disney. Earnings beat, sales missed, but the big news there was that it was launching two direct-to-consumer streaming services. And investors still questioning what that means for the company. Does it entail more short-term pain for a long-term gain? For Netflix, it's bad news because Disney is going to no longer provide its content to Netflix in a couple of years. So it's no longer going to pay or get that payment from Netflix, but for Netflix, that means a loss of content as well. Raytheon moving higher to a record high. In fact, it's not the only defense company. Lockheed Martin and Northrop Grumman as well. A lot of the rhetoric here around President Trump and North Korea sending these defense shares up on the day. And Priceline at 1906, a drop of almost 7%, the worst day since June of 2016. It's continued heavy spending on marketing weighing on that company's outlook for this quarter.
Let's take a look at the bond markets now. Obviously, in light of what we got, those headlines on North Korea, you can see a natural bid for safety. Not much going on, though, in the U.S. 10-year yields, so tighter by 1 basis point. We did see them tighter earlier on in the session ahead of that $23 billion 10-year auction today, so that plays into it. But you can see more of a bid for safety from the likes of the Germans. Italy underperforming their yield, touching just above 2% there. This is an interesting one. Obviously, the threat in response to Donald Trump's comments from last night from the North Koreans was Guam, and this has got a third of its land mass covered by U.S. military bases. You can have a look inside my terminal here, #BTV9133. This is Guam's municipal debt. We didn't see much of a reaction actually in there. I can't tell you much about the element of liquidity in this market or other, but I just thought this illustrates the power of the Bloomberg terminal.
Yeah, I was just going to say, I didn't realize that Guam had debt or a municipal bond, but
I'm not sure anyone else did.
There you go, the Bloomberg
there you go. Exactly.
All right, let's move on to currencies here. The dollar turned positive, creeping higher, or actually not really, ticking higher for a fourth straight day. If it does move up, it would be the longest winning streak since March. But you can see there the dollar down versus the safe havens of the Japanese yen and the Swissy. I wanted to highlight the Korean won as well because of all the headlines out of North Korea and Washington. It gapped higher, or I should say lower at the open. The dollar gapped higher at the open of Asian trading on the heightened tensions. And of course, that sharp leg up reflects the dollar's strength versus the won. Also, staying with Asia and Asian currencies, the Hong Kong dollar surged in early afternoon trade in Asia, rebounding from a 10-year low. Of course, we're talking in relative terms here because the Hong Kong dollar is pegged to the U.S. currency. The Hong Kong Monetary Authority announced a bill sale plan that will drain liquidity from the financial system. If you look at the Hong Kong dollar over the last 2 years, this is dollar, Hong Kong dollar, we've seen a steady weakening of the Hong Kong currency that's been driven by a wider interest rate gap with the dollar and plenty of supply of Hong Kong dollars, so ample liquidity in that currency.
Quick look at the commodity markets here, as you would expect, given everything else that we've said. A bid for gold here, actually trading at an 8-week high. We also saw a bit of softness in the copper markets too. Obviously, we've seen that run up in prices, the first drop that we've seen for 4 days. Again, you'd expect a bit of risk pairing here too. And I just wanted to give you a quick cross-reference here on corn and soybean. We've got the U.S. Department of Agriculture releasing their World Agricultural Supply and Demand report on Thursday. That's a monthly report, and we get the first corn and soybean forecasts of the season based on that. So worth checking in for that tomorrow, and we will no doubt be discussing. Those are today's market minutes.